Hey, what's going on, everyone? Matthew from therighttrader.com back again with another video. Today we're going to be reviewing and doing an analysis of MGM Stock. I've heard the name thrown around quite a bit recently. It's obviously at some pretty low prices, and a lot of people have been wondering, could it be a good opportunity to get in at a cheaper price, right? Is this a good time to invest in a company like this? And that's what I'm going to try answering in this video. We're going to go over some of the stats, the valuation, and of course take a look at the charts as well in just a second here. So make sure to support this video by giving it a like and subscribe. Turn on notifications to stay updated with the new content that I post. Currently, MGM is at a market cap of $6.94 billion, so just under $7 billion. It is still paying its dividend. I believe they have not cut their dividend, so that is pretty interesting. While they could cut their dividend, it is still going from the best of my knowledge, and it obviously typically pays a pretty nice dividend, right? So that's something to keep in mind. Now, that higher paying dividend is something that is reflected on the price, right? If we look back, it does have some times where it has some pretty flat price action, doesn't go up tremendously, and that is most likely due partially to its higher dividend, similar to AT&T stocks. As soon as you start getting into 4, 5, 6% dividends, it can impact the actual ability for capital appreciation, right? Meaning that the price of the stock might not go up as much, but you're getting a good part of that back in dividends, right? So it does balance out to a certain extent, just something to keep in mind though. Now, I also wanted to point out that if we look at its 52-week low, it was $5.90. That happened on this drop over here. So I think that getting this stock at $5.90, basically $5, is an absolute steal. I wasn't able to get it on $5. I wasn't paying enough attention, but I do think that that was a very, very good opportunity. And we've bounced back quite a bit already, right? I mean, let's just take a look at the 6 months chart here. We got our drop, we bounced, and we stayed very, very, not even a day, right, at $5. So we bounced very quickly off that $5 area, and we're already back above $10, which is pretty key. Now starting to move towards $15. So we're going to talk about some price levels. I think we could actually see a pretty quick bounce to $20 to $25 now. And that's going to be pretty interesting. That does provide a nice percentage increase, right? Over 50% price increase. But it is obviously, maybe people are wondering, could you make more on it or not? I'm going to take a look at that in just a second, right? But I did want to mention that we are now back above $10, and we're probably going to be very soon above $15 again, possibly even $20, which isn't a bad thing, right? That's a good thing. It means that we should recover pretty fast here despite everything. Don't forget that MGM is, of course, in the resort hospitality hotel industry, and it's an industry hit pretty hard by all of this. With that being said, right, I think that it's an already established business. When things start get back and running again, it's going to be there, and it's going to be there to make money. And that's sort of how I think you need to look at this, right? It's a short-term impact, but this has been a business that's been around. It's a long-term business, and those are some of the upsides that I think you need to keep in mind, right? Despite the shorter-term risks and downside. And let me mention that this is a high-risk play no matter how you look at it, right? It's a higher risk, higher reward play. But one of the things that I wanted to mention is it may be a situation where the reward outweighs the risk as of right now, I think. So, and once again, that's not financial advice. That's just my personal opinion. Let's take a look at the more detailed chart here, see what's going on. So the first thing that I wanted to point out is we dropped significantly below the 30 line on the RSI, and we now moved back above that. So that is a bullish sign. And on top of that, if we look at trend line on the RSI, we're uptrending, right? So we've got several bullish signals here on the actual indicator side of things that shows that we're in full bounce mode right now, right? We fully broke out of the downtrend line on the RSI, and we're currently pushing higher as we're reaching for that, sort of breaking above that 50 line on the RSI, which I think could take a little bit of time, but I believe it's going to happen pretty shortly here. Now, if we look at the price side of things, we're going to see some pretty interesting stuff. First off, right now we're a little bit in a consolidation mode where if I go ahead and draw this out, right, I'm going to extend these Bollinger Bands. What could happen here is a tightening of the Bollinger Bands. I've talked about this a lot, where basically the Bollinger Bands will come tighten up like this, and what that's going to lead to is really, tighter consolidation of the price, right? Right around $15 basically. So that is an absolute possibility and something to keep in mind. With that being said, though, that doesn't mean that we shouldn't bounce in the next couple of weeks to months. In fact, if we zoom out a little bit here, you're going to see that especially if we move to the weekly time frame, we are fully due for a bounce, and we have a lot of resistance at $20. So that's what I just put in here, is around that $20 horizontal resistance level. But I think that we do have a fair chance of getting back above that within the next 6 months, if not sooner. So unless things get really bad and things, start shutting down again, I think that it has a really nice opportunity here. And let's see, this is a pretty good time frame to be looking at. Kind of gives you an idea of where we're at now, which is really, by all means considered sort of back in this consolidation area over here, which like I said, right, we could enter some consolidation that could last a bit of time, right, even a couple months. But overall, we're getting in this lower range, and we're really looking to get back into this higher range, which should be doable, right? Especially if you're thinking 2, 3, 4 years out. That should absolutely be doable, in my opinion. I mean, just look at back in the past, right? When you had these bigger drops below the 30 line on the RSI, same thing, right? Same thing as we're having right here. We bounced back above it, and we had a great recovery after that. So let's even go to the weekly time frame now. This is going to give you a really good picture, I think, now that I'm going to zoom out, and you can really see just how low we are, in fact, on the Bollinger Band. So if we look at the Bollinger Band, right, we have a very big range where, the upper Bollinger Band is all the way up to $43. The lower Bollinger Band is around $10, and we're currently really on the lower end of this Bollinger Band right here. We are going to bounce. Shorter term, we have to bounce a bit. Probably, like I said, $17, really trying to move towards that $20 level, which I think we should at the very least test within the next 6 months. We may not be able to fully get back above it, but at the very least test. That seems like an almost guaranteed thing, in my opinion. And if we zoom out even more, you're going to see that we're actually below the Bollinger Band, which is extremely rare, especially on the long-term time frame, and that indicates a significantly oversold, tendency. Where even back here during the 2008 drop, yes, we were a little bit below that Bollinger Band a few times, maybe once or twice, but we bounced from that, right? That's an extreme rare situation. And even here on the RSI, right, we can see moving below the 30 line on a monthly time frame is very rare in that bout. So if we zoom in, you can see that we are literally, I know the chart is a little bit messy here, but we are just about under that lower Bollinger Band here on the price, so we're just now starting to break back into it, but we are at the absolute lowest level on the Bollinger Band possible on this monthly time frame. And if we look back at where some of our middle moving averages are, like the white line here, it's at $25. So typically we move back to those levels, and like I said, that's what makes me think that I'm not too worried about us moving lower. The only time that I'd maybe think things could last a bit longer is if we move back below $10. Otherwise, $10 and $15, we should have no problem holding that level, and I think we can even expect, pushing into that 15 plus, 20 plus, and even $25 within the next year or two. So especially long term, it's not going to be every day that you're going to get an opportunity like this on, a big brand established stock, and it's a pretty rare thing, right? Like I said, we can zoom out, we can look back in the past, and the fact of the matter is, this really happened only one other time. It's a very similar signs on as far as the indicators is concerned as in 2008, right? It's a pretty much as close as we're going to get to a repeat, I think, as what we had back in 2008. So like I said, if we move below $10, maybe that's a level where we might want to start getting a little bit more concerned of. This could last, multiple years potentially of consolidation. But if we're able to stay above $15, and especially if we move above $20, really, we're going to be back in the running for a bit of an uptrend. And one last thing that I should draw out here is the trend lines, right, on this longer term time frame. I think it's going to give you a pretty good idea of what exactly is going on, because I do see here a bit of a symmetrical triangle formation, which should be pointed out. So if I go ahead and draw these trend lines, especially this downtrend line here that is new and fresh, so to say, you're going to get to see a clearer picture of the symmetrical triangle formation that I'm talking about here. And the good thing that I'm seeing right now is it should not necessarily last all that long. And keep in mind, this is a very bigger time frame, but what we're seeing here is, potentially some up and down action up until 2023. That is if we have struggle, breaking above, $20 to $25, which I think we have a pretty good opportunity at potentially moving above that. But just to keep in mind that we do have a little bit of a range in here in this $15 to $20 area, like I had mentioned. With that being said, thank you so much for watching, everyone. Make sure to give this video a like and subscribe for more. Also, don't forget to follow me on Twitter and on check out